Hello, everybody. Welcome to the Anomaly course. We'll be covering Core Content Lesson 3 on phases of price. Firstly, let's go over the expansion phase of price. So, what are the characteristics of a higher time frame expansion candle? Right, that small wick and close to the high, mainly consisting of mainly body. Now, looking at the lower time frame characteristics of an expansion phase of price, what will they all have in common? They'll have shallow retracements, opposing candles supporting price. In a bullish market, you have down close candles supporting price. In a bearish market, you have up close candles supporting price. And in a bullish market, you have lows being rejected and highs being displaced through. In a bearish market, you have highs being rejected and lows being displaced through. Now let's get into a real chart example. So here we are on the daily chart. And as you can see, with this expansion daily candle, what do we see? Small wick closing near the highs. And the easiest way to anticipate an expansion daily phase of price is after a reversal. As you can see, this previous day closed back inside of the previous day, creating a daily C2. That's when you expect a daily C3, which is an expansion candle. Now let's drop into lower time frame and see what this candle looks like. So here we are on the hourly time frame, and as you can see, price trades into a key level or a swing low. It reverses off of it as it creates a C2 candle. What follows a C2 candle or a reversal is C3 and C4 expansion. As you can see, what do these two candles have in common? Right, small wicks. They're closing near the highs, which is exactly what an expansion candle looks like. Now let's drop into the lower time frame. So within those two hourly higher time frame expansion candles, what does the lower time frame look like? Right? What are we seeing? Opposing candle supporting price, right? Every single down close candle in a bullish expansion is supporting price. We see gaps being respected. We see lows being rejected. Now let's go ahead and cover the consolidation phase of price. So first, let's outline the higher time frame consolidation within a higher time frame perspective. So what will that really look like? So firstly, when to expect a consolidation is always going to be after an expansion. So as you can see, this previous candle has expanded, and what price will look like within a consolidation, especially on the higher time frame, it will not take out the previous candle's high or low, which is what we call an inside bar, right? It's a neutral candle or a small range candle. So as you can see down here, closes inside of the previous candle's range, closes indecisively. So what will that look like on the lower time frame, right? So here's that expansion. And as you can see, price is just trapped within a range of this high and this low, creating failure swings on both sides. This is something we want to avoid at all costs. So here we are on the daily chart with a live chart example. And as you can see, price expands into an objective. When price expands into an objective, this is highly likely when you're going to get a new phase of price. And as you can see, price cannot take out the previous high or the previous candle's low. It just inside bars or is indecisive in its direction. So now let's drop into the 1 hour time frame. So here we are on the hourly time frame, and as you can see, price is trapped in between this high and this low. No real sensitive direction, creating failure swings off the highs and the lows. This is something we want to typically avoid. Just simply wait till one side of the market is taken, and then we reevaluate and react off what price does at those levels. So now let's cover the retracement phase of price. So when can we expect a retracement? That is going to be after expansion, ideally expansion into a key level. That's when we can definitely expect a retracement. So firstly, let's talk about the higher time frame point of view for retracement. That is going to be when price leads failure swings at the point of retracement. Typically, it's going to retrace into a key level, mostly a gap, and then continue. So here we are on the lower time frame point of view. Price expands, retraces, as you can see, leaving failure swings. When price leaves failure swings like this, we know it is likely a continuation, and we're just waiting for price to hit a key level to catch that expansion. So here we are on the 4 hour time frame. let's kind of walk the phase of price here. What do we see? Expansion, met with expansion. If we want to continue this bearish leg, what type of phases of price we want to see? Either consolidation or retracement, because those are the two continuation signatures if you want to see this leg hold from high to low. So what kind of signatures do we see here? Fair swings off the lows into a key level. Let's go on to the lower time frame so you can really see the signatures in price here. So dropping down to the lower time frame, here we are on the 30-minute. As you guys can see, what do we have off the lows? Failure swings, very lackluster price action. That's exactly what you want to see after expansion for a retracement. We trade into a relevant high. We have that reversal. That is the trigger for the expansion, right? To go from retracement into expansion. What do we target? The opposing lows. So lastly, here we are on the reversal phase of price. So what does that look like on the higher time frame? As you can see, it's going to create a C2 candle. Now, ideally, we're only going to participate in the C2 candle if there is a small wick. As you can see on this candle here, if there's a large wick, wait for the close. That will be the reversal. Then we will look to trade the expansion or C3. What do you want to see within this C2 candle is expansion met with expansion. The high of this candle created from high resistance from a key level and displacement away from that key level. On the lower time frame, you will see exactly that V-shaped signature, expansion into the key level, expansion away, because that's essentially what a reversal is. It's expansion into a key level and expansion away, right? Displacing away from that key level. So here we are with a real chart example on the daily. As you can see, price expands into a key level. What kind of phase of price do we get? We get that reversal into expansion candle. Let's drop into the lower time frame and see what this phase of price looks like. So here we are on the lower time frame. As you can see, price reverses off of this high. What kind of phase of price do we get? That V-shaped signature, right? That quick, sharp move away from our key level. Then what are we seeing? Is expansion signatures, right? We're seeing shallow retracements in price, opposing candles supporting price, gap supporting price. This is exactly what we want to see.